The fear of a global financial crisis is spreading. It started last week with the collapse of Silicon Valley Bank and the Signature Bank in the US, and now fears of a wider contagion effect are quickly going to the other side of the Atlantic Ocean. On Wednesday, Credit Suisse lost almost a quarter of its value. The lender's shares dropped by as much as 30% after its largest investor, Saudi National Bank, said it would not provide more financial assistance.
The answer is absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory.
Credit Suisse is the second largest lender in Switzerland, right after the UBS Group, despite the Swiss financial regulator FINMA and the nation's central bank both saying that Credit Suisse meets the capital and liquidity requirements imposed on systematically important banks. They were also quick to assure the market that the central bank would provide Credit Suisse with liquidity if necessary. Currently, the lender needs money indeed. On Thursday, Credit Suisse said it will borrow up to 50 billion Swiss francs, which equals to $54 billion from the Swiss National Bank. It said this is a decisive action to strengthen its liquidity. So why is this happen? Where did investors' fears come from? The main trigger is definitely the Saudi National Bank's decision not to inject more money into the troubled lender. The Saudi bank currently holds a 9.88% stake in Credit Suisse. The bank doesn't want to be embroiled in regulatory issues, since if its stake goes over 10%, all kinds of new regulatory rules will kick in. This further slashes the confidence of Credit Suisse investors and clients, especially after a string of scandals and financial reporting problems that have already undermined sentiment. However, the market fallout from the recent US bank collapses obviously plays a role here. Even though FINMA and the Swiss National Bank said the current turmoil in the US banking market did not pose a direct risk of contagion for the Swiss financial markets, European banking stocks have already sunk dramatically. The rapid increase in US interest rates has made it harder for some businesses to pay back their loans. Most importantly, market confidence, the mood, is clouded when fear of liquidity risks comes up. With many questions on the market now, are we still going to see a rate hike from the European Central Bank today? What's the next move from the Fed? A simple question that the market is definitely wondering. Who's next?